Well, as the financial year closes up and we look forward to FY26, a slew of interesting conversations. And today we're speaking with Pieter Elbers, CEO of Indigo Airlines. It's been an interesting year and maybe an exciting setup for the next year as well. Pieter, thank you so much for your time with us here at NDTV Profit.
Yeah, well, thanks for having me today. And indeed, a couple of more days and this very interesting and dynamic financial year is over.
Yeah. So let's start with then the quick recap before we get to what you're expecting in the next financial year. I think one big highlight from where I see it, and tell me if I'm wrong, is you've started stretch, expanded more outside the core, in that sense, bolstered international, and also dealt with forex fluctuations. Would that sum it up?
Well, those are two elements which are obviously very visible. If I give a couple of highlights on the first part, really, we turned 18 in last financial year, which obviously was a big milestone for Indigo. And with that turning 18, we decided to further expand our portfolio and our offering to our customers. Introduction of our business class product on the nation's busy and business routes was clearly an important part of that. So Stretch was announced in August, came into operation in November, started on Delhi Mumbai, and thereafter Delhi Bangalore, and actually as recent as this week we have started on Delhi Chennai as well. But we've done more. We've continued our internationalization. We've added our loyalty program. So a lot of initiatives which were announced and spoken about earlier have come to reality in the year FY25. And I think that pretty much summarizes what Indigo is doing. We make announcements and thereafter we're actually executing them.
What has been the occupancy levels like on the business class offering so far? Because we've had some months now to see how it goes. And has it been as up to speed to what you expected?
Yeah, very much so. I think the important part is that it takes a bit of time to have one of these routes fully covered with all the planes on the route with business class. So, despite the fact that we are the world's largest taker of new aircraft and we have them coming in at an incredible speed of one plane every week, still it takes a couple of weeks before a new route, all the services are being offered with Stretch. So we started in November, and by early Jan, all the 40 flight sectors we have on a daily basis between Delhi and Mumbai were operational. Bangalore started after that, and only recently has reached that level of having all the flights operated with Stretch. So, so far so good, and clearly Chennai is only just a couple of days.
So coming back to that point, anything you can share with me on what occupancy levels have been like?
It's a bit fluctuating over the days. We're not yet disclosing any sort of precise numbers on a basis. We would like to give it a bit of time to mature, to get the full market impact and full market awareness. We still work with some of our co-chair partners, for example, to get them connected to this product as well. So I think it would be a bit premature to go into any sort of average numbers at this point in time.
Okay, fair enough. Let's look forward to FY26. What are the kind of targets that you're seeing, Pieter, on occupancy levels, on aircraft additions? Can you give us a sense of what you've mapped out for the next year?
Yeah. The next year is going to be a further execution of our strategy. In 22, when I had the pleasure of joining Indigo, we announced a strategy towards new heights and across new frontiers with a couple of very clear objectives. And one of those objectives was doubling in size by the end of the decade. And I think we're very much on track for that. In calendar year 24, we welcomed a total of 113 million customers. The number we shared for FY25 as a projection is in the range of 118. And we expect to continue growth levels for next year, similar to the growth levels which we had past year. We'll further expand our internationalization, important part. We operate today as much as 40 international destinations. A few years back, there was only 20. So continued growth towards that doubling by the end of the decade, continued internationalization, and again, more completion of customer initiatives like the one we have with our loyalty program, Blue Chip.
Okay, so a lot happening there. I think one big change since we last spoke, Pieter, and we spoke after your quarterly results announcement, what was very visible was the forex hit. And I think that sort of overshadowed everything. Now, since then, the dollar has weakened, the rupee has strengthened, and you also spoke then about your strategy of hedging on forex. So I'm wondering how that's panned out since we've seen such a sharp reversal.
You know, I think these hedges, you don't look too much on a quarter-over-quarter basis. And indeed, it was a pleasure talking to you last time, and we spent a fair amount of time on looking at the forex and the impact on that, the mark-to-market on a quarterly basis. I think more structurally, if you take a step back, yes, we do some of the forex hedging, but importantly, we also start to work on our internationalization, and with more foreign point of sale coming into the network, basically we're creating a more natural hedge where, depending on the rate of exchange, our revenue management teams can actually opt to take rupee sales or Singapore dollar sales or euro sales or whatever other currency there may be out there. So I think it's more a longer term perspective here, and clearly the hedge and that sort of short-term reversal does not impact. Where we're of course happy with is the short-term reversal in terms of, you know, it will have a different impact as what we saw in the last quarter.
Okay, so there will be a different impact that we could see at the, you know, when you report Q4, because this has been, I would say, a reversal of that trend. But let me come to an interesting time that we're embarking on, which is your peak summer. What is that looking like right now in terms of forward bookings and yields? Any information or color that you can add to that?
You know, the market in India, I guess, it's not only the third largest domestic market in the world and one of the fastest growing markets in the world. And you know, just we were proud of that. In the year 24, it was Indigo being the second largest growing airline in the world. So, you know, the market is characterized by a huge growth, both domestic and international. But another very important element of the Indian market is the incredible, I would say, late booking character of the market itself. And a very significant part of the bookings are really taking place in the month itself. So having an outlook on the summer or even months ahead is kind of challenging. I think what gives us a lot of encouragement really is what we have seen over the past couple of months. In both Jan and Feb, we saw the market growth, according to the DGCA data, of 11% year-over-year growth, both in Jan and Feb. So I recall we had one of the earlier calls together. There was some questions on the consumer spending and discretionary spending. But when it comes to travel, actually, we see a very strong trajectory and continued growth on that field.
Yeah, you know, you spoke about late bookings, Pieter. I'm tempted to ask you, is there, what portion of passengers book late? Because this is always a conversation point, not in terms of the business, but more in terms of, you know, chatter that why are fares so high? Should there be a government regulation looking at a capping on fares? And now you've added this point that most people book last minute.
Yeah, well, when it comes to fares, and I know this is a continuous sort of point of attention, but if I look at where the average fares are, and you know, at the end of the year, one can even see it in our annual report and translate, you know, what are average fare levels, and compare that to other parts in the world. India is still one of the very competitive and low fare markets around in the world, and that's exactly why, for us, maintaining our cost leadership and continue to build on our cost leadership is such an important factor. So fares eventually should be a reflection of what are actual cost levels. And you know, when fuel goes up or when fuel goes down, and when prices of procurement, and we see inflation all over the world and big challenges on the supply chain. So all these elements are usually being reflected in the prices of air travel, and the same goes for prices of airports, VAT on fuel, and all these different elements. So overall, I think the prices in India are still one of the lowest in the world. That's one. Two, price levels eventually should be a reflection of cost levels. Otherwise, any company would be out of business after some time. And three, you know, there's always some variations, which basically is the same for any business, including hospitality.
Okay, so on par, you're saying fares are okay. Tell us about the international routes that you will be looking at in the next year. And as you mentioned, Pieter, FY25 was a lot about fairly aggressive expansion on more and more international routes. What's penciled in for the next financial year?
Yeah, I'm by no means in a position to correct you, but if you allow me, I would call it ambitious expansion rather than aggressive expansion. You know, the further you move away from India, the lower the share of Indian operators is. To the Middle East, it's probably in the range of 45%, 45, 46% is operated by Indian operators. But if you go to Europe, it's probably more in the range of 30% Indian operators, 70% European operators. So I think the opportunity out there for Indian operators to take a fair share or relevant share of this market, in addition to the growth of the market, is where really the opportunity lies. And the expansion itself for us, I place pretty much India there in the center of our operation. And we have expanded to the east, you know, new flights into Thailand, new flights into Malaysia, more and more flights into Singapore. We've expanded to the north. Whatever we've done in Central Asia has further grown. And we started to expand to the west with more flights to the Middle East. And the announcement we have now, which is a big thing for Indigo, we've taken a couple of 787s on them, please. First one started to Bangkok, and by the summer we start to Amsterdam and Manchester. And we're in the process of identifying the next set of international destinations in that area.
Okay, just very last point, Pieter, is on the business class, and I know we spoke about this, but you've said on your XLRs you plan to have business class cabins on all, and in my view, aggressive is a good word. It's not a bad word. as good as ambitious. But
I knew you would come back on that.
No, I'm saying aggression is good. There's nothing wrong with aggression from where I sit. But nevertheless, is the business class foray something that you're very keen on strategically? Because the question is that this airline has the identity of a low-cost carrier. Are you moving now towards more of a full-service nature? On business class, do you think that there is enough appetite to fill those seats as you have imagined or envisioned?
Yeah. Well, thanks for bringing that up. And I will no longer try to catch you on a specific word, but thanks for bringing that up. I think what Indigo is doing is we're expanding on the very foundation of our company, which is really offering affordable fares to millions and millions of flyers in India, and we continue to do that. And that's the foundation of the company today and tomorrow. And our product is exactly geared for that. And when we say we're going to double in size towards the end of the decade, that's exactly where we're going to grow. So if we look to the domestic market, we have a total of 450 routes. Out of the 450 routes, we'll have in the range of 12 to 15 routes where we offer the business class. So just to put it in perspective, that's where we talk about. And I think it's fair to recognize that the routes between Delhi and Mumbai are not the exact same as between Delhi and Ranchi. So if you take a focus on how India is developing, we just need to have more and more capacity to serve the domestic market, and yet at the same time have a tailor-made product on those routes. To some extent, the same goes for the international travel, and that's exactly why we have said also the XLR will have a two-class configuration, a limited business class for those destinations where it will operate, where there's demand for that business class, and some other places where there's no demand. And I mean, we fly to Krabi now. We don't need an XLR for Krabi in Thailand, but that's typically a route where one does not have to offer business class. I must say, our flight to Bangkok, where we have now the 787 with business class, is doing extremely well. So it's not a change of our business model at large. One may call it hybrid. We just make sure that we have a tailor-made product for those routes where the emerging and aspirational India actually wishes to go, and that's exactly what we're offering.
Okay, that's interesting. Aspirational India. That's definitely the mood or the customer view that you're catering to. Thank you so much, Pieter. Pleasure speaking with you as always.
Likewise. Have a great weekend. Thank you.